bOAT, a consumer electronics startup that has become almost a household name when we talk about wearables, had filed for an IPO, a 2,000 crore rupee IPO back in January. Now it has raised about $60 million in a new funding round valued at $1.4 billion. The new funding round has been led by an affiliate of Warburg Pincus. So what happens to the IPO? Also, what was it like in the Diwali season that's just gone by? Let's find that and a lot more with the CEO, Vivek, who's joining us all the way from the United States to be a part of the show today here on ET Now. Vivek, we really appreciate you taking the time out. I know you're awake late night to be with us here in India. We are recording this in the morning over here, so we really, really appreciate it. Thanks a lot. Why did you go in for a new funding round? What does it mean? Is the IPO now off the table?
No, I think the IPO is it's a matter of when, not if. We are taking a temporary pause for three reasons. One is we are seeing a tremendous amount of growth in the smartwatches segment, which we had entered recently. In personal audio, we are the clear number one in India with a market share more than 3 times the number 2 player. And we're in fact now number 2 globally in personal audio as well behind Apple. So what we want to do is now replicate the same playbook in the smartwatches space and become market leaders there. The second is that as you were talking about funds, a huge number of investors expressed interest in the bOAT story. It showed the conviction and confidence investors have in bOAT, and without even running a formal process, in a matter of a few weeks, we were able to secure the funding. The third, as we all know, is financial markets are still currently choppy. So we thought it's prudent to wait for some time, scale up the wearables business, and hit the markets when the timing is right. But our intent is definitely to go public at the right time. It's just a temporary pause.
So temporary pause for a 2,000 crore rupee plus IPO from bOAT. So Vivek, a temporary pause, does it mean that you may have applied to the market regulator that you wish to withdraw your draft red herring prospectus?
Yeah, from a technicality perspective, the DRHP allowed us to only raise about 180 crores in a pre-IPO round. Because we have raised 500 crores, we proactively approached the regulators and have withdrawn the IPO. The good thing is that almost 70% of the groundwork has already been done. So when we decide to again go for a listing, it will be a relatively easier process with just a little bit more work required at that stage.
So during this temporary pause, at a time when the financial markets are also so volatile and tech is out of favor globally with investors around the world pressing the sell button, what's going to be the big game plan, the plan of action at bOAT? Are you, like many other startups, now in a new mode where you're going to be conserving cash? Are you cutting down your marketing spends? Do you have a timeline for when you want to be profitable?
So, the great news is that from an IPO perspective, even today, the bOAT story is very compelling. We've delivered over 100% growth in top line every year for the last few years. We have crossed 3,000 crores in revenue. We have been profitable from day one itself. And so this is a profitable business, a growing business, clear market leadership in our categories, and a very strong brand, the highest brand awareness in the category. And so again, the decision to postpone the IPO is more from a strategic consideration point of view because of the kind of growth we are seeing in the wearable segment. And so our intent is to really up the ante, significantly invest now in making smartwatches a second core. This is not about conserving cash. We are profitable, a very strong balance sheet. Net debt to equity is less than 0.5. And so we have the resources now to be able to really start scaling up the smartwatches segment. Personal audio still continues to do very well. So this is not the reason to again postpone the IPO is not because of any weakness in the business, but much more from a position of strength here.
What do you mean by your second core business? So far, like I said in my introduction as well, bOAT, which is trying to become a household name for wearables, particularly with audio. So when you say you're going to make a second core business of smart watches, what can we expect?
Yes. So, today, for instance, about 75% of our business comes from personal audio. 25% of the business comes from smartwatches. This number was much lower last year. So, as we're looking at consumers, we want to help them both with providing them with the best listening experience through audio. Now, with smartwatches, we want our consumers to use smartwatches to really help lead healthier and fitter lifestyles. So as we look at consumer lifestyles, as we look at providing tools for them to actually lead much more fitter, healthier, and fun lifestyles, smartwatch now becomes the second core after personal audio.
So what's the game plan for this? You already have smartwatch as one of your categories. So how are you going to scale it up? Is it going to be more features, more products, competitive pricing?
Yeah. So, it's still relatively early days in the smartwatch segment. India, as we know, has about 700 million smartphone users. Less than about 4% of them today currently own a smartwatch. And the number of smartphone users will become over 1 billion over the next few years. We were a relatively late entrant in the smartwatch category about a year and a half ago. In a very short amount of time, both Extend and both Storm became the best-selling smartwatches in the country. But our range was quite limited. And so over the last couple of months, we've really expanded the range. And now the Wave series of both watches is now the best-selling watches in the country. The important thing we are doing is that we've realized this is no longer a device game, but this is more of a platform play that should enable consumers to actually use watches to really lead more healthier and fitter lifestyles. A lot of products today are relatively undifferentiated, with competitors essentially white labeling products from China. We acquired a company, Kaha Technologies, a few years ago. This is a world-class technology, wearables technology platform. And so with Kaha, we actually own our own platform. And through this platform, we can launch much more advanced features. We can launch much more reliable features and actually use smartwatches to provide consumers with far richer data analytics for them to actually improve their lifestyles. And so the product portfolio, the range, the kind of features we'll offer, and the way we will marry lifestyle with feature-rich products, quality, and pricing, that's the boAt USP, which worked very well in the audio segment. We intend to apply that in the wearable segment and try and drive that to market leadership.
What will be the starting point, the starting price rather?
What we've realized again is it's very important to have a full portfolio. So we have watches from 1999, so sub 2,000 rupee watches, to watches over 4,000 rupees. There are going to be consumers who will enter the category for the first time. For those, it's very important to have competitive entry-level products. At the same time, there are going to be consumers who are going to be able to want to upgrade products to a much richer set of features. The great thing is now, even at the sub 2,000 rupee range, we are seeing a lot of mobile features like BT calling, larger screen sizes, better AMOLED displays, all coming into the market. So this is going to be a matter of both having good entry-level prices along with more premium products.
Okay, so let's see how this second core category shapes up. Not trying to, be a bad pun over here, but I guess only time will.
Thank you very much. Pleasure talking to you.